What's up, traders, and welcome to the live stream. Today, I want to do a little bit of teaching. Earlier this week, a member on my Discord actually asked me a question, pinged me, and asked me what I use to spot reversals, make money, trade. And the key thing that I've found in my decade of trading is what I call price spikes, false breakouts, if you want to call them that. And so the first half of the live stream is going to be dedicated to showing some examples from the week and beyond, because I think this is really useful for traders new and maybe even old to learn and understand. So if you're watching live, just hold on. And if you are catching it later, skip on ahead. We'll see you in just a moment. What's up, traders? Happy Friday. Welcome to the Weekly Close live stream. I do this every Friday at 4 p.m. Eastern. That is UTC -5 for everyone else catching the rest of the world. I actually get a lot of international folks that find me on YouTube or TradingView or Discord. Links are all down below. And this week, a member of my Discord reached out to me. He's actually kept on pinging me for several weeks now, wanting to talk to me. And, one of the things about being a trader is I don't work for anybody. And so that's why I've always been very hesitant to do any kind of classes or things like that, because then I got to work, And so, but I really, as I was teaching, I really realized how much I enjoyed that. I used to teach, I used to do trading education, and it was very actually a fun experience. I kind of got into it, and he was brand new, very young, and just starting out trading. And so I wanted to give him the most useful trading indicator. That's what it is. Well, I made an indicator, but it's really a concept. And the concept is basically that of false breakouts. I call them spikes. I made an indicator for TradingView that identifies it. That's where I have the little shading of the bars, like right here. And I think used in the right context, these can be some of the most powerful signals of reversal that you can find. And that's what we're always looking for in trading, right? We don't want to take any risk. We just want to catch it at the bottom and catch it at the top. And well, that doesn't happen every time, but it is possible, believe it or not. And there's a good example this week. News came out. By the way, this is not my actual chart. I usually go to this kind of more simple, dark, better on the eyes chart for everybody to look at when I'm teaching. But this week we had a very interesting spike that happened on Tuesday. Let me just clear up my charts here. I like simple charts. One of the things that I was really trying to emphasize with this new trader, and this guy is brand new, so I wish that I had scheduled this with him on, because what I found was when I'm teaching, I do really well with back and forth interaction. So if you will help me in chat, if you have questions, it may take me a second. There may be a little lag time, but ask them in chat, and that really keeps me going. That answering questions makes me explain things that maybe people aren't understanding. I really do enjoy teaching. I do enjoy teaching because the mindset I take towards it is, if someone's not getting it, then I need to explain it better. I think some people, they get frustrated trying to teach because they think, oh, this person's not getting it, they're slow. But no, everybody learns at their own pace. And there's a lot to know about trading, and sometimes I think I even forget that. I've been doing this for over a decade now, and in that time, one of the things that I have learned and really tried to emphasize to new traders is simplicity. But you're not going to start simple. You're going to start by throwing a bunch of indicators on your chart. Like I was kind of making the example for him. You're gonna try to engineer the solution. But when I'm teaching and when I'm doing these live streams, I try to make sure to make everything very clear and concise. Never have on more than the indicator that I am talking about, because that's just going to confuse people. It confuses me. That's why I don't do it. If I'm trying to look at a trade from the perspective of the indicator that I'm using, then I want to only look at that indicator and then add to it if there are some contexts, like 50% retracements. That's another thing I have to incorporate as well. And so, like I said, in chat, one of the reasons that I do this live stream is for opportunity generation for me and my community. The links are, of course, below for all those social media things. Help the algorithms out. But if I'm talking to a few really interested people, I'm really happy. So I really appreciate the people that watch. Casey, I see he's here. He's here every week sharing his breakouts. I appreciate that. And if you have symbols to look at, I already got a couple in chat to look at. Oh, my sound? Yeah, okay, good, Casey. Good. Yeah, if you have any problems with TradingView stream, so just refresh the page. But yeah, okay, we're good. I already have a few. Thanks, hello. I already have a few to look at, CVNA and Hood. We will look at that in just a second. We do that in the second half. But yeah, if you have symbols to look at, stocks, crypto, commodities, post them in the chat, and we get to that in the second half of the live stream. We kind of go through all the things to look at, and we have found some really, really good opportunities, just about at least one a week to look at. A lot of things come from this live stream because I can't look at every single symbol every week. So I appreciate you guys. I appreciate everybody helping out, being kind of part of the community. So, all right, simplicity. All right, that's the number one thing. And so we're just going to look right at spikes. Now, what is a spike? So a spike to me is a false breakout. And what we're going to do is we're going to look at Tuesday this week. Tuesday this week, the CPI, that's Consumer Price Index, was announced. Basically, new data what inflation in the United States is doing. I know I got friends that they don't believe the numbers that are put out, but it's the best we have to go on. TLDR, inflation ticked up just a little bit, a tenth of a point, both I think month over month and year over year. So inflation is not coming down like the Fed wants it to. And so what that means is that there's a slightly increased probability for people that want to speculate on if the Fed will raise rates again. Now, they've said they won't. They said they're at a pause. And I found just honestly, the Fed does what they say they're going to do. Now, people are constantly trying to front run the Fed decisions because there's a lot of money to be made. If the Fed were to come out and say they were actually going to raise interest rates, well, that changes the whole damn market. And so people want to get ahead of that and make their bets on interest rates, make their bets on equities, even make their bets on crypto, as it has somewhat been correlated to it. Not this year quite so much, but definitely in 2022. And so interest rates from the Fed, they set the tone for everything. They're the tide, like the ocean tide that, it doesn't matter what the waves are doing, but the tide's high, that wave's going to come in even further. And so CPI is going to be the number that the Fed looks at to know if they're going to raise rates, lower rates, or keep it the same. And the fact that that inflation is not coming down means that they're definitely going to keep rates the same. They're definitely not going to lower rates. And if it keeps on ticking up, they may have to raise it again. And I got a lot of people that think, oh, well, the Fed's going to lose control, hyperinflation. You don't hear that much anymore now because inflation kind of has stabilized. But it was really, really popular last year. That was the big FUD last year. They were going to lose possibility. What's this to look at, Jen? We'll look at that here in just a second. You just started trading last month, Wolf? Yeah, okay. Wolf, interact with me a little bit. So, yeah, post your questions here and I'll get to them. All right, so that way I have some back and forth, like really gets me going with the teaching process. Okay, so anyway, 8:30 Eastern, my time, Fed announces rates. Now, what you'll notice right here is a 1 minute bar right at 8:30. What you'll notice at the top of this bar is a wick of a candle. Now, when I talk about spikes, I'm talking about the behavior of candlesticks or what's represented in candlesticks. And so there's a lot of different candlestick patterns out there. There's a whole book. There's like 200 plus different candlestick patterns that one could learn and memorize. I never did any of that. If you want to do that, great. That's a great little academic pursuit, but I don't really think that that's necessary because what's really key for me is understanding what happens in this little area right here. Okay, and I'm gonna go through a narrative for what likely happens in the minutes that something like this occurs, this price spike, because we know I tell you what, let's go basics. Candlesticks, let's do that. So with a candlestick, what a candlestick means is you have the open and the close make up the shaded part, the big thick part of the candle. And if it's red, you know that the start of the candle is the open above, and then it closed bearish, and it closed down here. Likewise, if you have a green candle, you open here and close here. You know that's the case because green means bullish, it closed up. Red means bearish, it closed down. I know I'm going to talk about some remedial stuff here, but just bear with me for folks that already know this. Because the high and low are going to be represented by the wicks. And so basically what you have is the entire action of price encapsulated in that 1 minute, that time, or depending on the time frame, that's what your time frame charts are based on. If you do a 30-minute, each bar represents 30 minutes of time. Same thing, high, low, and it's OHLC, open, high, low, close. And so in this case, it's open, high, low, and close. And so one of the things we notice here is that within this bar, within this 1 minute period, price came all the way up and then came all the way down and then closed right here. You can't see this because this is now a closed bar, but what happened and what usually happens when you have major news events is price very quickly spikes up in one direction. You'll see it. It will look like a big, thick bar in that direction, and then within seconds will get slammed down. And that's what happened on the CPI. And this happens, this is not computers, this is not whales, this is not algos. Well, it is, but these kind of actions have happened going back 100 years. You can go back and read Market Wizards by Jack Schwager. He has a whole series of books, interviews with traders, and traders will be talking about these kind of things happening in the 60s and the 70s before computers. It's basically just sort of a phenomenon of low market liquidity. In other words, people before news events, they don't know what's going to happen, so they pull their orders out of the order book, because that's what makes up the trading, basically. Well, excuse me, that's what makes up the market, is you have a lot of bids and you have a lot of asks. And if you go and look at a bid and ask on a platform, you'll kind of see they'll move around a lot. But basically what people do is they take away their orders, and so there's not that many people to catch price when it goes in either direction, and so it can move very quickly. And more often than not, and it's very tradable even, in that little instance where you have that first little push up or push down, as the case may be, if you're quick enough, and you really can't be because this is the realm of algos, because this happens within seconds or fractions of seconds, one could probably take a short position here at the high and catch it on the way down. Problem is, what happens if it falls through in that one instance that you don't catch it? Well, then you end up down here and in a big loss. So I don't play that. I don't play that game. But it's very important to notice the phenomenon of this in price action. So hopefully everybody's with me and got it to that point. This is not the trade. This is not the trade of this week. The trade did not happen at 8:30. Can't really take advantage of this. It happened so quickly. The trade actually happened once we got, let me slow that down to the morning. Now, what am I looking for when I'm looking for a price spike? I want some kind of context. Some kind of context to take the price spike. Okay, let's just list those out. These are the things that I got. You can't just take every single price spike, because if I go back in time and I look at the different times that the indicator that I drew fires, and basically this indicator that I wrote up, it basically just identifies when there's a wick of price that breaks a prior high or low for the last 26 bars and then closes back inside the range. In other words, I'm trying to catch where price shoots in one direction and then very quickly returns back inside. Ideally, what happens is people are getting stopped out in that sort of a movement, and they're going to start panicking, closing their positions, creating a reversal. That's the whole premise of it. But if you look, not every one of these things works. Okay, we're not computers. We're not just taking a very simple, like, if this happens, do this. Man, if trading was that easy, whew, man, if only. But trading is tricky, and so you have to use your brain. You have to incorporate some other components. And so what I found, the best points to look for these kind of spikes and to take them, times when they can actually be true reversals, is, trading view, where's my, trying to find my color thing to make this a little more obvious. All right, green. Hold on. Give me a second. Usually, let's see. Usually, there we go. Okay. All right, so the things that I'm looking for, and by the way, if you got questions, go ahead and put them in the chat as I'm going along. Please do keep me going, keep me talking and answering questions, because I'm here for you guys. I want to teach. I want you to make sure you guys are understanding this, because I think it's important. All right, number one, news events. Big time for spikes, for price spikes, and that can happen a lot. Just we're talking about here. Call this time events, and that means market open, market close. Not so much market close, but really market open, especially if you're doing stocks or you're doing equity futures. Oftentimes, not only just the 9:30 Eastern open, but also the 10 a.m. there's sometimes news at that time, and also 11:30 a.m. Those are some kind of interesting points for that. So we'll just call this open or market open. And then since we can't be there for every single event like this, or they don't always give us symbols or signals, the other thing is at major levels. And that really can be broken down into 50% retracements and past high low. Now, these get a little nebulous. In other words, they get a little tricky, but we're going to look at some examples of this. And so these are the kind of instances that I want to look for these spikes to happen. And if they do, then they're going to be a good bet. They're going to be a really good trade. It is worth taking a trade if it fits my rules, which we're going to go into in just a second, the rules around taking them. So any questions like that? All right. For price spikes, what time frame do you generally like to view them on? Any. One of my, what is it, in philosophy, it's either a supposition or a, what is it? It was, there's something that's like, it's not a principle, but it's something that, a postulate, okay. One of my postulates is that for a technical indicator signal to be useful, it needs to apply to any instrument, any time frame. If you find a certain signal that happens on a single instrument or a single time frame, then more than likely what you've identified is a potential edge, but something that's just inherent to that point in time of the market or that symbol. Like if you find out that, every day at 2 o'clock this stock goes up, great, you may have found an edge for a trade, but it could just be some dude out there has got this, job, and he just does it at 2 p.m. to buy some shares, which you can exploit that. But what happens when he stops? What are you going to learn that's going to translate into another instrument? So good question, because I look at all time frames, and these things can happen on any and every time frame. You also have to remember that, not all the spikes, not all the false breakouts are going to happen using the indicator. So we really have to understand this as a concept. And one of the key things that I go back to and look for as an example, is that of Bitcoin. Now, Bitcoin did a spike here just to prove to me that not all spikes work, because this spike was not a full, well, it was sort of a reversal. It reversed for about 2 weeks, but I really was hoping that reversal would continue on, but instead the Bitcoin maxis get to win, and they get to probably go on to retest the all-time high. But if we go back in time and we look at the all-time high from back in 2021, something very interesting happened. And this was in October of 2021. You had a false breakout. Now, a lot of people missed this. I know they missed it because I have a lot of friends in the crypto space, and they were all excited that after several months of just kind of waiting around, wondering, was this going to be it, or are we going to finally go up to 6K Bitcoin like we're all promised? Well, they did not really pay attention to the fact that within this week, or more importantly, the month, price had come up and then closed back inside. In fact, you had October do this, then you had a little bit of hope come from November because it pushed up above it, but then finally you had yet another. Now, like I said, this didn't trigger my indicator, because the thing about my indicator I drew was it looks at this red line, which is the Ichimoku Tenkan-sen, before it fires off a signal. And so if we're sitting around waiting for the indicator and not understanding the concept of a false breakout, then we're going to miss an opportunity like this, or miss an opportunity to take profit rather. But the key thing is this. If this instrument, let's just forget what it is, if this instrument is really getting bought, if it's bullish, if it is meant to go up, people should keep buying it. This should be a big closed bar. This should not be a bar that closed back inside of the range. Instead, you have these failed attempts to break out. And, well, we know what happened after that. People still hodled. People still believed that, oh, it's going to come back. Oh, we're going to get it. But instead, what we ended up getting was about a 78%, I think, drawdown from that point. And so that's why it's very important to understand this as a concept, not just look at indicators, not just wait for, your indicators to say something. Understand this fundamental component of price action and how important it is to understand if something is meant to go up, it should keep going. You should see big bullish bars, big, thick, girthy bullish bars. All right. Are we in the euphoria stage already? In what, Piram? Stocks or crypto? Might have a different answer for both of those. All right, so again, it's important to understand the concept of false breakouts before we just start taking them as an indicator. That's kind of like where your education to start is understanding this element of price action. Price action is understandable. It sometimes does weird things, but it does certain patterns that we can look at as traders and then use. All right, let's go back to NASDAQ from this week. Again, questions, guys. And then if you have symbols to look at for the last half, we will definitely get to those. Links are down below, helping me out with all the algorithms and stuff like that. Really just trying to make a community of traders that share ideas so we can all make some money and help each other out. Yay, kumbaya. All right, so 8:30, the news of CPI came out. And really, price kind of just ground down all up until the other time event, like I talked about, next to the open. Oop, went too far. So we're here at about 9:29 a.m. All right. Price is just pretty much doing a lot of nothing. But price has come down to an interesting point. What do I mean by that? Well, if you're a new trader, and I did it too, you have this tendency to just focus. Like you got a sniper rifle, you got a scope, and you're focused directly on the 1 minute time frame. Hell, people even go down to the seconds time frames because they want to go, they want to fast action. But listen to Boomer Norok. This beard has come from looking at the longer time frame, which moves slower, like an old man into bathwater. It's a lot easier to understand things when they're moving slowly. You're not forced to react. We need to go up. We need to do our homework before we sit down to trade this morning. And that means looking at the daily. And so the daily of the NASDAQ futures, as we're looking at, well, we notice a couple of things. Number one, it's going up. I mean, it just is. Broke out of its all-time high. Like at the end of last year, came back, retested it. It's going up, okay? Stock market is bullish. Stocks, Piram just asked me, are we in euphoria stage right now? It's kind of hard to say, and I'm going to go with no. And the reason I'm going to go with no, am I happy with no? Well, I really, you can look at your Google news feed or whatever your news feed is. Don't get sucked into it because they don't tell you anything useful. They basically, if you read the news, if you read CNBC, you're going to get a good handle on what the market sentiment is. That's what it's good for. And right now, there's a lot of optimism, but this cautious optimism. People are starting to believe that this is a real bull run, but you still got all those people out there. They're just like, oh, well, this is fake, blah, blah, blah. But they're getting quieter. And so, no, we're not euphoria. Euphoria is when, I'll tell you when euphoria is. There's a couple of key indicators. Number one, and this applies to anything. This applies to stocks. This applies to Airbnbs. When people stock or crypto, people start teaching classes. Another thing is when you see a lot of IPOs, because companies know, or big funds, big banks know when to IPO things. Is when there is euphoria, because then retail traders just rush in to buy this crap. But anyway, we'll talk more about that in just a second. Let's finish up with the lesson on spikes. We're coming into that second half of the live stream, but I appreciate these questions because they get me talking and sharing. So, what's going on the daily here on NASDAQ? Like I said, going up. Just for right now, let's just accept that stocks are going up. All right. So we really want to take long trades. I mean, we want to be with the trend. So, and what it has done on Tuesday with that CPI is it pulled back to this red line. This red line is nothing magical. It is based upon the Ichimoku Tenkan-sen, or if you go in TradingView and you bring up the indicator right here, it is the conversion line, as they call it. But if the original name, which I'm butchering because I'm not Japanese, is Tenkan-sen, Tenkan sen. Doesn't matter. It's the 9-period 50%. Again, it's a 50%. And so 50% are key to my trading. And what happens is right here at about 8:30, as we're getting into the morning, this is a 2-hour chart that we're looking at, we can really see this trend that developed over the last few days, or actually no, that's a few weeks. So basically from January the 31st all the way up to February the 12th, we had a bullish trend. It's part of the wider bullish trend, but it's a bullish trend in itself. It also brings us back to this auction zone. I like that word because if you think about it, let's just clear this up right here. What is this right here? Well, you have people stop buying it. They came down, bought it up, sold it. And so we can kind of see that there's a lot of, fighting going on in this zone. And now price has come into that zone. Okay, so we really want to think that something is going to happen once we come back into this place where traders had battled it out a couple of days before. And so to make it even simpler, it's at a 50% level. And so we want to think bullish trend, pull back, let's buy it. That's what we want to think about going in. So we're thinking bullish. Now, if we drill down with our sniper rifle down to the lower time frame, it's below it. It's below it. That's fine, but we're still in that zone of a pullback. And so what we have is a price spike right at the open. And as I said, news events and timing events, those are excellent opportunities for spikes to really signal reversal. They're not coming out of nowhere. They're coming out of something that happened. Oh, another thing I should add to that list, if you're trading stocks, earnings. That would be number 4 on that list, by the way. So again, I wish I hadn't deleted that list, but 4, time when price spikes are very, very good is on earnings if you're doing stocks. And so that's key. That's key. Big events. Even like I said, the ETF launch for Bitcoin created one of these price spikes, which led to a 2-week reversal. So how do we make this into a trade? Well, I got a couple of rules that I stick with. And so number 1, we got to talk about risk. Now, risk is how every trade is going to be defined. And within the indicator, what I did was I presumed that one was going to take a trade on the pullback to the red line. In other words, it's going to close inside that level, and it even closed inside the low. This is really key. This is what really makes it a good, proper spike, is closing between that low. I mean, we can kind of see that price before the open created this little zone, and then it spiked down below it and then pulled back and gave us an entry right there on the red line. Really, really good, awesome opportunity. Now, the little dot below, that is basically giving yourself a little buffer. Little buffer of space. Hold on, let's do this. There we go. A little buffer of space below the low, because if price were to come down and take out that low, it's not really a price spike anymore. Now it's probably going to keep on going. So we're out. We're out of it if it breaks that low plus a little bit of an ATR, average true range based buffer. And then I always want to take a minimum of a 3-to-1. So let's go ahead and start writing this up. So 1, stop below the spike. I'll move this over a little bit. Grab it. There we go. Make this a little smaller too. And this, I use a 33% ATR buffer. So there's 33% of ATR. And in the indicator itself, you can change that if you want. Also, before I take it, I want to make sure that the ATR clearance is high. What is the ATR clearance? ATR clearance is a measurement of the distance between the last low and the spike itself. And in this case, it is right here, 285%. So in other words, this is a pretty big gap right here. That's what I want. I want a big one. Now, if it's 1,000%, that doesn't make it 100% probability to work. It just means it's better than a 70%. And a lot of times when I take spikes and I try to fudge that number, go below 80%, and they don't work, I'm like, well, broke my rule because I really wanted to take that spike. But 80% is really my rule for taking this, for how much of a clearance below that last low it gives you. And so that is what we want to look for. All right, so now that we've got these all considered in our criteria, we want to make sure that we get at least a 3-to-1 risk-reward ratio to the next support or resistance, SR. Now, what's going to be support or resistance? Well, in this case, when we're trying to take a reversal of a big move like this, it's going to be the 50% of the prior trend. And so we're going to use our Fibonacci tool in TradingView to draw that to here. And so that's going to give us a 50% level right here. Well, the beauty of it is this trade actually gave us more. We actually got a 4.36 risk reward on this right here. And so this is a totally rule following trade that we can use. All right. And so that's what we're going to set up our trade as. Simple enough. And then we're just going to let it run. Now, if you take 2 contracts, as I like to do, or half your contracts, if you take 4, it lets you be a little more nimble. What I like to do is at the first take profit, close half. But I'm going to not let that be a rule for everyone else, because you got to figure that out for yourself. You may want to take all profits and reset. You want to take majority profits. You may want to take a little bit of profit. There's no wrong answer. But take some profit. Take some profit, because while these can be very good reversals in day trading or any other time frame, the market's a little tricky. And the market likes to do things like come back and do things like this. Very rarely, not never, but very rarely can you catch a reversal on like a day trading time frame on the equity indexes that will let you just keep on going up. Very rarely, very rarely, very rarely. So have a rule in here to take some profit on that opportunity. And that way, if it does come back after you've set your stop at break even, you still made money today. So that is the basics of a spike. Now, questions before I go forward. And hey, Migromo. Questions before we go forward, and we start looking at some opportunities. All right, Wolf, should I trade close to earnings, or is it too risky? That's a good question. Let me see if there's any questions about the spikes in general. There's questions about my portfolio distribution. Okay. All right, well, it looks like everyone understands spikes, I'm going to presume, because we're talking about other things. All right, well, let's jump into what people want to talk about then. All right. How do I know where to set my stop loss? Because the stock has gone up before, but I didn't sell it and it went down. Can you rephrase that question, Wolf? Not sure what you mean. All right. Well, let's go back up through the chat right here. Um, yeah, you read Reminiscences and Trading in the Zone. Those are the two books because people often ask me what books to read for trading. Definitely Reminiscences of a Stock Operator and Trading in the Zone. Those are the two that I would recommend. And then for fun reading, maybe you call it bathroom reading. You would have the Market Wizards book. There's like Stock Market Wizards, New Market Wizards, Hedge Fund Market Wizards. I've haven't read through them all, but I've definitely perused them all and read certain. It's basically interviews with traders, and if you've been trading for any amount of time and you read these interviews, you're gonna like nod your head. Yeah, I've had that happen to me. Because I mean, these are people that are doing this professionally, making billions of dollars, and they're facing the same kind of emotional instances that you are, and they talk about how they deal with them, and it's very useful, very useful. You'll get something out of it. So it's Reminiscences, Trading in the Zone by Mark Douglas, and Jack Schwager's whole series of Market Wizards, all on Amazon. I guess I should set up a link for that because I always recommend it, huh? So I really want you guys to get the annotated version. Oh, yeah, I should probably do that. I should probably give an Amazon link because people, they want to support, they want to throw me some money. I don't want your money, by the way. If anyone ever contacts you asking for money for my indicator, it's not me. It's free. All I ask is that you join Discord and put your name in there or DM me because that's where I answer questions about the spikes, and we share instances of spikes happening. The stock spike that I took earlier so far this year was a CTRA, and so this was one that happened on I don't think this was earnings, but it was on January the 22nd. This is an example very recently. I look for these every morning. These are the 9:30 30-minute spikes I look for on stocks. This is, I wouldn't call my bread and butter, but this is one of the ways that I get into stocks. In other words, I buy stocks based on this. To answer your question about my diversification or my portfolio, it depends on what you're talking about. I have my long term, which is a more of a position, a company that I really like, and I like to own winners. I know that sounds kind of trite, but companies like Waste Management, these are companies that I've owned for years and years and years. This looks like a crypto, doesn't it? But no, this is a monthly chart of a garbage company, Waste Management. I've owned the stock for, I don't know if it's about 15 years at least, and I've taken additional trades in it. There was an opportunity somewhere last year that I got into it. I had to go through my logs to find out, but this thing just keeps on winning. LLY, another one, just looks like a damn crypto. Amazon, and these are going to be ones where I may have gotten in on a technical level. Amazon was what I call the trade of the century because it pulled back to the 50% from 2001 to 2021. And these are ones that I'll put in long-term holdings. In other words, these are stocks, not options. These are stocks that I just buy, I put in an IRA, or I put in a regular brokerage account, and I forget about them unless they hit an alert and I want to get out of them because I only want to keep winners. I don't want to keep things like PayPal, which I did have at one point. And so this was a long-term holding that I had, and this was one that I had forgotten about in my long-term holding. And you notice how it came down to the 50% right here and then broke it. I don't want it. But like I said, I forgot about it and I didn't realize it until we were all the way down here. That hurt. That was dumb of me. And I closed it. Now, a lot of people are like, oh, why'd you close it? That thing could come back. That it could come back. It's so low. How much lower can it go? That's why you get out of things, even in your long-term accounts. I think a lot of people, they like a company, they get into it, but you can use basic trading skills, basic trading price action analysis to manage your long-term portfolios as well. Like, don't hold on to a stock that is making you a bag holder. Don't touch things that are just going freaking nuts. Don't try to overthink winners. I think Nvidia's been interesting because a lot of people are trying to start shorting Nvidia. I'll short it. I will. I'm not going to not short it. I own this in my long-term IRA. I own this in a long-term brokerage account. But that doesn't mean I'm not going to take a put option on it when the time is right. But the time is not yet right. And so I have my long-term stuff that oftentimes does begin as a tradable opportunity. One tradable, Tesla has been a couple of examples of this, but Tesla, even if we go back to before all this it's doing right now, one of the great opportunities in Tesla happened back in 2020. And this was a standard. I say standard because these are things that I look for. This was a, is it here or 1 second? There was a 30-minute spike that happened. Is this not showing? Hold on, let me bring this up in Thinkorswim, because I don't know if it's showing here. There was I need to show you this one because no, maybe it's not here. Hold on. Let me look. Let me try to remember where it is. So Tesla back in 2020 was, it's back. No, it's back here. Oh yes. Here it is. All right, there we go. So this was back in 2020. Aha, here we are. This is a 9:30 a.m. spike on Tesla. Okay. And it's coming at the bottom of this range. And this is back before the split. It was in the 3 digits. I don't remember exactly what it was, but this was a spike that I held on to in both trading and long-term accounts. And then I went for a hike because it was going against me. Nobody wants a trade to just immediately start going against them. And this was one where I just was like, okay, you know what? I put it into my long term. I'm just going to leave it. I'm going to see what happens. And sure enough, that afternoon, they announced something or other, and it opened way higher and shot off. And there's a bunch of people that thought it was going to go down at that point. But this is an example of where I would use a trading signal as an entry point for something that I was going to take long term. There's also instances of, I'll see what other spikes. So those are the ones that come right off the top of my head, honestly. So as far as diversification goes, I don't worry so much about that, and I'll tell you why. Because I'm looking primarily at S&P 500 stocks for trading opportunities. Number one, because I don't have time to look at 5,000 stocks a day. And S&P 500, it's all in a basket of ETFs. They're all heavily correlated. When you're talking about diversification stocks, you can have different industries, but I find that if I'm looking for trading opportunities across the board, 50% retracements and spikes, what you'll end up finding is opportunities in different instruments. Like, in other words, last year, I've got a lot of trades that I put on last year that are just going with the market. Home Depot, which is home improvement, is retail. That was a 50% retracement level. Coca-Cola did a retracement level. That's a consumer staple. RTX, which is defense, it's industrial. That's a 50%. Tesla, which is tech, is it's a 50% meandering around that. Humana is one, I think, from back here. I need to check and see where my entry is on that one. And Truist Financial Corporation was somewhere right about here. And so that's financial. So I end up diversified by just looking for opportunities and then only taking opportunities. And then winners I stick with, and then losers that stop out, I take out of my portfolio. And so by the nature of that, I'm not bag holding onto any stocks that are going against me, like PayPal. Or at one point, I love talking about my losers, by the way. I'm not going to sit here and say I don't have them. Zillow was one that I was in a couple of years ago in long-term holdings, and I got it at the 50% retracement level, and then I got out when it broke below the lows of that zone right there. And again, this is an example of just not bag holding. You know, it's better to just get out of things that aren't working, find another opportunity to get into them when they are, rather than sit here and incur a minus 50% drawdown. That's money, that's capital that you could be putting into something else. You'd be better off putting it into something getting 5%, like a S&P 500 index fund. Well, it's up probably more than that now, but you just be better off than sitting here and back holding. And I know we're looking at things hindsight, but if you get stopped out and then it reverses up and you miss out, oh well. What you don't want is for something to deplete your capital like this. You'd rather have that chunk of capital doing nothing at 0% than losing 50% of its value. It's just that simple. And it's hard emotionally for us to do that because we don't want to accept losers. But you know what? If you watched my live stream the last couple of weeks, you know that I was short Bitcoin, and that didn't work out. And it's frustrating. It is frustrating. But you know what? I felt a lot better now that I'm flat. And I'm just able to sit here and look at on my watch list and, be happy for my friends that are long it and love to troll me about how wrong I was. Doesn't mean I'm not going to short it again, but now I have a clear head. Now I can look for another opportunity to short or long, but I don't think I'm going to long it right now. Need a pullback. All right. Let's look at some simples since I've ramped. All right. So let's see. Let me go back up through the chat. Wolf asked a question. Should you trade close to earnings? Short answer, no. Earnings, as I like to say, are the destroyer of setups. In other words, you can have a really, really good setup. What's an example of one that might have happened recently? You got an example of one that might have happened recently? Sure, I'll talk about that, Magromo. Trading or earning, as Jen says to you, is basically gambling. I mean, if you like the company and you want to flip a coin, is it going to go up or down? Honestly, most people, what they do is they take option trades, and you got to think about it this way. Let's say you want to trade a stock around earnings. You need to buy a call or buy a put, okay? The problem is at earnings, the market has already priced those options within a certain range of where price may go. And so if you buy an option on either side, put or call, if it doesn't get outside that range, you're not going to make any money. So number one, you have to be right. Is it going to go up or down? So you're already at a loss, 50-50. It also needs to go way outside whatever the market expected. So you need it to not only go in the direction you wanted, but you need it to go bigly. So now you've got 4 possibilities. It goes up small, up big, down small, down big. And so you only make money in one of those instances. So you've got 3 chances to lose trading options around earnings and 1 chance to win. You have a 25% chance to win when you trade options around earnings. No, thank you. No, thank you. If you told me it was like a 51%, I'd be like, all right, let's do it. But a 25% chance to win? No, it's gambling. It's for people that just they want to have some fun. They want to roll the dice, and that's all it is. It's just you're going to lose 3 out of 4 times, basically. People can say, oh, they go on Wall Street Bets and they post that they did these big YOLO opportunities, but selection bias. You're going to see the people that either, made it big or, lost porn, basically. So how do I know when to take profits? Well, okay, so if you're taking a pullback or reversal, then look for 50% retracements. That's the simple way. If you are in something and it's going up, it's making new all-time highs, I honestly think if at all possible, you want to just leave it alone. I know that's hard because it could reverse back. But if nothing's going to hurt you putting your stop at break even when something's just going up. Or one of the things that's going to make you feel better, and again, trading is about managing emotions. And what I'll do in these cases is when something's gone up a lot, I'll close half. And then move your stop to break even, and then forget about it. Just leave it alone. Can be difficult because you know it's always there. You're going to watch it every day if it's in your trading account. But you want to leave yourself, and this is a baseball term. You want to take swings, and you want to give yourself the opportunity to have a bunch of players on the bases for when you finally get a home run. Like with NVIDIA, I've owned this thing for years and years, and I haven't touched the position. Same thing with Waste Management or LOY. Can't say the same about Tesla because I did close that trade from way back when. That was one of the reasons that I changed my strategy back here based upon this trade, because I got out in this run up because I took profit, and I was like, you know what, I should have left some on. Now, what's funny is we almost came back to that same level at the beginning of last year. But still, you want to keep a little bit in the market on winners. You just do. You just do. All right. If you have any confusion, join the Discord, ask in the channel if you have questions. All right. Let's make sure I got all these questions taken care of. TFC. It did go ping at that 50%, but again, I'm still getting dividends. And it hasn't come back to stop me out from basically this entry back in here. It was basically once it bottomed out during the whole banks are going to fail kind of thing. This was the entry point. I had to kind of look. I toughed it out through here and earned my dividends. I'm going to just see what it wants to do. I'm going to give it a chance to come back and break this 50%. You average down. Okay, okay, that's fine. It didn't stop out. I'm sitting here looking at, Walgreens and PFE doing the same thing. They're just kind of being nasty here around this low. Hasn't taken out the low, but being nasty. I like for things to just go up. Don't you? I like it for things to just go up. All right. So my general portfolio distribution is I just have lots of stocks. I understand all stocks are going to be correlated. My broader portfolio distribution, I have bonds, and I have in that I have municipal bonds, and you can get these in any type of account. I don't know if you're American or not, hello worldly, but if you look on like Charles Schwab, you yourself can buy tax-free municipal bonds, and right now you can lock in about a 4.5% to 5%. For 10 years on that. I know that sounds small, but that's the kind of stuff that people that have a lot of money do to preserve their wealth is put it into those kind of stuff. So those I would consider to be investments. But I try to start every long-term position I have, like in stocks, on a technical setup, or at least frame it around a wider technical setup. Amazon is Amazon. I don't think that my girlfriend is going to stop sending 2 or 3 boxes to my house every day, anytime soon. And so I think Amazon is going to be a great company to own into the future. And then when it pulled back at the beginning of last year to the 50% that it had made over the past 20 years, that was something that I bought. Now, I didn't want it to go down into the 70s, but, well, here we are. And I'm going to own this for a very, very, very long time. And not options, shares. Because options, eventually they're going to expire. But shares, I can have them forever. So, and this is slow money, get rich slow kind of stuff. But, once you make all this money day trading, like most people want to do, what are you going to do with it? You want to day trade every day? And that kind of goes back to the question of McGromo, my daily routine. I'm going to be honest with you guys. I'm not entirely consistent right now. And that's just because not every day is a trade. But Tuesday, I was active. Not every day you're going to have anything. Wednesdays, I'm superstitious. But ideally, what I want to do is I want to wake up early. And that is because I'm not a morning person. And let me just speak to this. What I want to do before I trade something is I come in the morning, get some coffee, wake up, get coffee, and then I want to draw my levels. And so the levels are going to be based on 50% retracements. And so Tuesday in particular, where I was up early and active, that's because it was the big news event this week, the CPI. I made sure to already know where my 50% level was. And so your pre-work is going to happen before you trade. You want to draw up your levels and know where you want price to come to, and that's going to make you be patient, so you're not trying to go long at like some point like this, okay? And then for day trading, that's really only going to last until about 9:30 a.m. until about 11:30 a.m. So only about 2 hours that I'm actually going to be looking at price action, because the afternoon gets a lot slower. And in that time, I'm also going to be doing my scans, my 10 a.m. scans to look for the 30-minute spikes on stocks. And that's where I'm going to find a lot of my stock stuff. And then I'm going to talk on Discord. I'm going to look and see what ideas people have there. And we'll look and see. And I'll take those positions, maybe make some comments, maybe make a trading view post. And then in the afternoon, I try to exercise and do what I want to do. And sometimes at night, because I'm a night owl, I'll do a little bit more research. But yeah, I don't have this this strict regimen to teach you or sell to you or anything like that. But you really only need about 2 hours a day of active trading, and the rest of the time you need to focus on yourself and being clear-headed and doing research. And so that's what I recommend for you there. All right. Let's go back and let's do a lightning round of symbols, all right? You have a lot of experience trading crypto on DeFi, CeFi. That's smarter than me, but never stocks. You should be able to use the same technical indicators. You really should. Now, DeFi and crypto is going to be a little bit different because a lot of stocks do this, but I will say this, and I don't know if this is the one particular you're looking at. People oftentimes, less in the last couple of weeks, have they come in here. They've asked me, in particular, let's say Cardano, for example. There's like, oh, Cardano's going up. This is when Bitcoin was going up as well. When do I buy it? Should I buy it now? I'm like, wait for a pullback. And, oh, look at that. Same rules apply. I'm not, I'm picking this out, but I'm not sure what live stream it was, but this will be in December. I know that we talked about it here on the live stream. People come in here. This is inevitably, most of the time when people ask me about particular symbols, they look like this or they look like this. Yeah. These are the two things that typically people come on the live stream and ask me about. And my answer to these things are, I don't know, bro. Like, I don't know what to tell you. You're back holding. I don't know. But the answer when something is doing this is draw a 50% from the low to the high, possibly look for spikes, and wait for price to come back and pull back 50%. Then you buy. Don't buy it here. Don't buy it. And crypto people will be like, oh, bro, it's going up to Cardano's going up to like 10. And it's like 50 cents. Doesn't matter if you buy it at 56 cents, bro. It's going to moon. No, it's just you can own more Cardano if you waited for 46 cents. And so it's interesting. I haven't looked at it in the last couple of weeks. But yeah, bing, 50%. Hell yeah. I think Solana was another one. I don't think it actually pulled back, or maybe it did. No, it actually missed it. So you know what? At the cost of being patient, at the cost of finding good opportunities, you may miss a few. But it's a lot better than bag holding and losing money. Trust me. Or don't trust me. Find out yourself. All right. DWAC. Yeah, DWAC is another one. This is looking pretty good. It's not dead yet. You would have rather it come up and hit your target if you're going to take some profit. But yeah, another moon 50%. Even YOLOs pull back 50% oftentimes. All right. What's my thoughts on BLX TFM? What is BLX TFM? What about ELX? All right, let's see if I can figure out what you're talking about. BLX. Bitcoin Liquid Index. Is that what you're talking about? I'll be honest with you. When it comes to, this looks like the price of Bitcoin. Okay, I'm not sure if this is what you're talking about. TFM. So you're on YouTube. Usually people on their own trading view, they can share me the actual symbol. I'm not sure what you're talking about with TF. TF. Is it Timber Creek? There's a lot of TFs. So you got to be more specific, my friend. ELX. Ethereum Liquid Index. I mean, they're all going to... I don't really like to look at derivatives. Like, a lot of people, they come and ask me, like, well, what do you think about the Bitcoin market dominance chart? And I can't trade it. So I'm not really sure it tells me anything about trading. If you can tell me how to interpret it, that's fine. But I do all my trading off of the chart of what I'm trading. I try not to get myself take in a little bit too much information because I mean I don't really feel like I need it. I think that everything you need to trade on is there in the price. All right, let's see. Have I missed anything, Jen? From Discord, no. All right, let's look through KC's breakouts. CAMT. Casey likes his 52-week highs. There's your YOLO. Let's see. NVO. Usually what I like to do is go through these and see if there's any that really speak to me. Okay, that's just a super bullish trend. Novo Nordisk. That's a pharmaceutical anyway, right? A lot like LLY. All right. WCM. This sounds familiar. Waste Connections. Garbage. So I like this one. The nice little breakout here of the range. Notice how it kind of hesitated and went. That's going up for another leg. That's doing good. I got Waste Management for that. Oh, and Waste Management. Well, you know I love Waste Management. That is, I just keeps on winning. Let's see. I really, one of the reasons I own Waste Management from way back in the day was when I first got into technical analysis and people were like, oh, the technical analysis is, this is before they called it astrology for men. This is where it was just, blah, like everyone still believed that fundamental analysis was going to matter. Like this is 15 years ago, boomer stuff. I've owned Waste Management longer than apparently some of my viewers are alive. That's awesome. But yes, I mean, it was so that I could, when people ask me, so you trade on technical analysis? I'm like, yes. So if the price of shit was going up, you'd buy shit? I was like, yep, I own garbage. That's my joke for Waste Management. USFD. Oh, no. USFD. U.S. Food Holdings. Okay, now this is a little bit newer. Yeah, so that's a good one. That's a good little pullback to hold. Okay, I like that one. I like that one because it's come up, it's fought the past all-time high, and it's come back. I would have liked to see it come back and actually test it there, but that's good. So those all look good. I mean, it's a bull market right now. Don't yourself get too euphoric because then you become the market, and then the market will go down. Because if you start getting euphoric, that's when it's going to go back on everybody. So don't do that to us. All right. Another question. Yes, I do use VIX. Thank you. That was on my list of things to talk about. VIX. VIX did something really, really important this week. I actually put this in my live stream notes. Okay. Tuesday. VIX, you know how they say time in the market beats timing the market? Cool story, Boomer. You can time the market using the VIX. The VIX is the volatility index. The VIX is the fear index. When VIX rises, people are fearful that market going to go down. But fear goes up quickly, and then it hits a certain point of maximum fear, and then it comes back quickly, and everything comes back to normal. VIX did something very, very important this week. From the October high of VIX, which incidentally was the low of October. Let's do this. Hold on. Give me SPY. All right. And let's clean this up a little bit. I don't need my price line. I just want chart. Okay, 1 second. Don't like it how it always adds that price line. Where is it at? They keep moving this thing around. Show price line, no. I'm about to just leave it because they moved it on me. I'm missing it. Okay, whatever. Price line it is. All right. So let me line this up. February is here. This is a day. No, we need daily. Daily chart. Okay. Boom. Yes. And then line this up. Boom. Boom, boom, boom. There. Okay. So, 1 second. Okay. Trying to get this lined up. There we go. Okay. So, price of the S&P 500 is highly correlated to the VIX. VIX, when it goes up, stock market goes down. Actually, vice versa. When stock market goes down, people get fearful. They make VIX rise very highly. So this week, we had a very interesting thing happen on CPI. The VIX index shot up to a 50% retracement level from the October high to the low that it set back in December. And very often when you have VIX shoot up to, because the VIX only goes one way basically, it shoots up high and then it kind of grinds down, stays around right here. When it shoots up to resistance and holds it, that's a bottom in the market. That's a bottom in the market. It is. And I don't know if I mentioned it on Discord this week, but it was very, very important. Now, that also comes back in context to October, which that was a 50% of the high and low all the way back to the March bank failure. Remember when the banks were going to fail? So again, VIX comes up, fear comes up to a resistance on VIX, and that ends up being a market bottom. So right there, not to the day, but when the VIX starts hitting these resistances, that's when you can start looking to buy stocks. And as hard as it is to not wonder if we're in a period of euphoria and wonder if, okay, is this real? You know, is the market going to come down? The VIX this week on CPI, it hit and held a major resistance. And that was on this day right here. And it's very small. It's not the October bottom, but it was a pullback to a little 50% within this trend, also a past high. It's very possible, and I'll go ahead and say it, by everything I have studied about VIX over the many years, by what I'm telling you here about VIX hitting resistances, that little pullback we had on Tuesday was a buying opportunity market bottom. I know it seems kind of small. I know it seems kind of hard to take because we're making all new time highs, but in the next couple of weeks, come back and look at VIX. Come back and look how it just kind of grinds down. As we get out of this first quarter, we're still halfway through the first quarter where a lot of the year's action takes place. And as we start moving into the latter parts of the year, I know I'm thinking way ahead now, the market could just slowly grind up. And this Tuesday could have been an actual market bottom for that based upon VIX. And so I'm glad you said that. I almost finished the live stream without mentioning that to viewers. But the VIX tells us this week we actually had a market bottom that could last weeks or months. I know it's hard to believe, but that's what the technicals tell me. And this is a very consistent thing that has worked for years and years and years, looking at the VIX hitting resistances, basically topping out. You know, one of the key things that it hit back in 2019. You know, you had the 2018. I think that was the Volmageddon. And then it came back and, topped out here. That was the Christmas bottom right here. And then you, of course, had this, which was, of course, COVID that threw things out of whack. But there were a lot of instances here of it hitting and holding that level as well. But really, over the last couple of months, VIX has kind of done this little stair-step job where you have October here. Even this right here, this bottom here on the bank failure, it came up to this level here. I don't think that's the 50% there, but wait and see. Yeah. Hood, going to be honest, I don't really care for Robinhood because I don't find their platform to be very useful as a trader. Is it breaking out on Ichimoku? Let's see. And it's breaking out. All right, if you want to own Hood, go for it. This is officially breaking out bullish finally on the Ichimoku, but it's hard for me to get behind the company because they just don't offer anything for me as a trader. And they don't really have that much money because most of the people that use them are Gen Z and millennials who mostly blew all their money back in 2020 and 2021. And I don't really see what Hood brings to the market, but doesn't mean it's not good for a trade. So yeah, Hood is breaking out. If you want to go long, go for it. Hashtag not financial advice. Don't let me stop you. It is officially going up. And that's a good breakout. I mean, I get it. Yeah, it is breaking out. Do I want to? All right, fine. I'll look at this next week. I'll look at taking a trade on this next week. Thank you, KV. This is why I do the live stream. It's for ideas. I'm going to be very negative about things like Hood for my biases, but you know what? Market doesn't care about my biases. Market likes to do things like make people money, cost people money. So, all right, CVNA. Yeah, get in your questions here. We're going to start wrapping this thing up in just a minute. Carvana. Okay, so Carvana, not yet. The key thing I look for, maybe I don't name's not particularly familiar, but here's the difference between Hood, and these are really good examples. Thank you for bringing these up. This is why I like doing these live streams, because I can teach. With Ichimoku, what I look for is price to be above the cloud on the daily. Actually, this is the weekly. Okay, weekly. Because this is going to be kind of a long-term thing. I mean, really, Hood, again, to circle back to earlier in the live stream when someone asked me, do we have Euphoria? It was no accident that 2021, if you guys remember 2021, the stock market looked like, this, 2021 was euphoria. And it's no accident that the hedge funds, the big institutions which manage the IPOs of stocks chose 2021 to be the record year for launching IPOs. Also, the year to launch this idea of SPACs. It's because they are smart. They know how to read the indications, and they know when people are euphoric. So one way to know when the market is in a period of euphoria is when a bunch of IPOs start launching, and everybody you talk to on Twitter is super excited about it, and it's going to be the next best thing. Never buy an IPO. It frustrates me to no end. Never buy an IPO, because IPOs are not for you to get rich. They are for the early investors to cash out. It just bemuses me that people still insist upon getting excited about IPOs, and they just lose money. You can buy a stock at a later time. The institutions choose periods of market euphoria to launch IPOs so that people will be excited and buy them. And then they lose money. And so back in 2021, I told people, don't buy IPOs. I don't think you want to listen to it. But anyway, I'm getting ahead of myself. Now, actually, no, this is germane to the topic. Because now, after everyone that bought it at 36 is sitting there just not paying attention, written it off as a loss, or gotten out, now you can come back 3 years later and buy it at a good price. And so what you have going on right now is price is finally above the Ichimoku cloud, and you have momentum, the lagging span on TradingView, getting out at the same time. That's your bullish confirmation that it's finally potentially getting outside of this consolidation range. And this is what you want to see. This is what you want to have happen rather than trying to buy and catch that falling knife. Let it come out of the cloud. Likewise, your other things, CVNA, Carvana, which I know they took a big old hit. Not quite yet, but close. You have your first part of the indication. You have price, which is above the cloud, but we don't quite have that coming out yet. So what I'm going to do here is in TradingView, I'm going to set myself an alert just above that high, because that will probably get momentum out. And I'm going to say weekly breakout. Thanks, KV Veccaria. Thank you. So that is a good thing to look for. Definitely. There it is. Yeah. Wait, let me double class. So price crossing above. Let's crossing up. Save. Yeah. Good. All right. QCOM. Is it NVIDIA? It is not NVIDIA. I think that QCOM would be better off if its name was NVIDIA. That's my joke. But, I mean, it's... Look, I talked to my friend who's Swaggy T, because sometimes pops in here. He's big on cruise lines, and he owns, I think, a little bit in all of them. You know, he's got RCL. He's got NCLH. And he's got, I don't need all this stuff anymore. And he's got CCL. Okay, so CCL, NCLH, these are all ones that, you know, when RCL was going up over the last, 2 years, one could have said, oh, well, RCL's going up. This stock inside this sector is going up. Well, I don't want to buy this stock that's going up because it's too expensive. I'm going to buy, the cheaper ones. I'm going to buy, CCL or NCLH because I want a discount. I'm not saying this is what you're doing. But you could be. You could be thinking, well, okay, I'm seeing all this bullishness in, stocks like in NVIDIA. In other words, chip manufacturers. Intel is going up. NVIDIA is, of course, going crazy. And was it Texas Instruments is doing nothing. So do I want to buy Texas? If I want to buy semiconductors, I don't want to buy the cheap ones. I don't want to buy Texas Instruments. I don't want to buy. So if you guys can still hear me, thanks for joining us. There we go. AMD is going to do good. But, like we looked at earlier, LLY, that's a pharmaceutical you want to, where I learned to look for 50% is from Ichimoku. So, Ben Graham, hi, I bought DHL at the 50% retracement. Thanks for your strategy. Oh, let's take a look at that. I like the kudos. But Mr. Ben Graham, which 50% was it? Was it this one? This is a weekly, so I'm presuming it probably was somewhere in here. Mr. Ben Graham, you need to tell me these things. Thanks for using it, but I like to benefit from it because I don't ask for people's money. Anyway, trade wisely. Have a good weekend, everybody. Bye-bye.